Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Welcome to another episode of On My Way to Wealth. My name is Luis, and I'm your host. Tax season is upon us. Now, before you file those tax returns, there's a couple of things that I think you should know. So let's get right into it. It's going to be a short and sweet episode, but there's just a couple of things I wanted you to know before you go ahead and hit that submit button on your tax return, or tell your accountant to do so. So number one thing is to know your dates. There are a couple of dates that you should definitely be aware of. Obviously the filing date is a very important one, probably the most, but let's talk about them. The first one is January 29th. That is when filing season officially starts. This is when the IRS actually starts accepting tax returns. So some of you that have a simpler return, maybe all you have is a W-2, the IRS is still not yet accepting tax returns until the 29th. Although you could prepare them either yourself or give them to your accountant, just know that it cannot be actually filed until the 29th. So that's the first actual day that you need to be aware of. Number two, if you happen to have a return that includes the earned income tax credit, the IRS by law cannot process a refund until mid-February. So as of right now, they're saying to expect that refund somewhere around February 27th if you file it before that. So just keep that in mind. If you are eligible for the earned income tax credit, even if you file your return early, you're likely not going to see your refund until somewhere around February 27th. So another key date to know. April 15th, obviously this is the magic date for most people, definitely individuals, most business owners. This is when the deadline is to actually file your return. However, one thing I always like to mention is if you are a business owner, and there's a few business owners that actually have to file sooner than that. For example, if you are the owner of a multi-member LLC, that LLC actually has to file the return by March 15th, not April 15th. So this is one of the mistakes I see a lot of business owners do sometimes. They forget that the deadline for their particular kind of business might actually fall on March 15th. So definitely, if you are a business owner, speak with your accountant to make sure that you know when the deadline for your corporation is, so that if you're not able to file by March 15th, you can file an extension so that at least you're still doing things by avoiding a penalty. Also, if you have an S corporation or a partnership, those are also due March 15th. So be aware of those if you are self-employed and you have either a multi-member LLC, an S corp, or a partnership. March 15th is that deadline. You could do an extension for 6 months. So that's something that may be in your favor. Definitely speak to your accountant about that. Another thing to consider, if you happen to live in the states of Maine or Massachusetts, your deadline is actually April 17th. Because there's a holiday, and it actually pushes over your deadline to the 17th. So just know that if you're in Maine or Massachusetts, you actually have 2 extra days to file. Another thing that's very important for April 15th is that is the deadline to open and contribute to an IRA. If you qualify to make a contribution to either a Roth IRA or a traditional IRA, you actually have until April 15th to do that. You can open the IRA that day, and then you can contribute to it that day. However, I don't recommend that you wait that late, but just know that you could. That actually provides you with some last minute planning. I'm a big advocate of actually planning for your taxes during the year, not during tax season. I've done some episodes about this. Tax season is not the time to do tax planning. However, tax season does provide for a few opportunities to do some last minute planning. Contributing to an IRA and a Roth IRA is one of those. So if you are aiming to contribute to or max out your contributions for your Roth or your traditional IRA, provided that you qualify, you actually have until April 15th to contribute for the prior year, for 2023. So this gives you a great opportunity. If you are doing the traditional IRA, is another way to maybe lower your tax bill if you owe. Ask your accountant, hey, what would happen if I contribute to an IRA? Another thing is, there is a savers credit for people under a certain dollar amount of adjusted gross income that contribute to a retirement plan. if you are an employee and you contribute via your paycheck, your W-2 would actually have that figure there, and you can just plug those numbers in, whether it's a tax software that you're using or you give it to your accountant to take advantage of the savings credit. However, some people that contribute to an IRA or a Roth IRA, they may not get the form saying they contributed until much later after tax season. So if you are one of those, make sure that you mention to your accountant that you contributed to an IRA, because not only might you be able to lower your tax bill, you might qualify for the savers credit. So that's something definitely to be on the lookout for. Another thing to know is if you are self-employed and you're opening up a SEP IRA, you actually have until the tax filing deadline, including extensions. So if you are supposed to file your return by April 15th, this could be for a lot of self-employed individuals. So whether you drive an Uber or you have a side hustle, you get a 1099, you're actually eligible to then open up a SEP IRA and contribute to your own retirement plan in that sense, right? So if that's the case and you don't file by April 15th, if you extend your return, you got another 6 months until October 15th. So that's another great opportunity to potentially be able to plan still during tax season and not have to contribute until April 15th. And then speaking of October 15th, that will be the deadline to finally file your return if you did file an extension. Now, here's something I want to tell you about extensions. The extension is an extension to file, not an extension to pay. So what I mean by that is if you think you're going to owe the IRS, don't not file a tax return. Still do your best to file your return by April 15th, because if you owe money, and I'll talk a little bit about this later, you could request a payment plan. Or if for some reason you just happen not to have your documents, I've had clients that are waiting for like a K-1 from a corporation beyond their control. They're not going to have all the documents they need to be able to file. Then go ahead and file an extension. However, if you think you're going to owe, do the best you can to figure out how much you think you're going to owe and actually make a payment if you can with the filing of that extension, because the extension is an extension to file, not an extension to pay. In other words, if you owe money, it's owed by April 15th. And even if you file for an extension to file, you get until October 15th to file, but not until October 15th to pay, because the penalties and interest will actually start running on April 15th. So be aware of that distinction there. If you are going to owe, make sure that speak to your accountant, figure out how much you think you're going to owe. If you could make a payment, go ahead and do that, right? And then you can go ahead and file your tax return later, October 15th. The second thing I want to tell you is to get organized. There's so many documents that we get, right? If you have a mortgage, you're going to get a 1098. If you have interest in a savings account, you get a 1099 INT. If you have investments, whether it's dividends or you bought and sold stocks throughout the year or mutual funds, you're going to get a 1099 as well from that company. So as you start getting things, they come from many different ways, right? Sometimes you get them in your inbox, sometimes you get in the mail. Make sure you create a folder for yourself, label it tax, start putting your W-2s, 1099s, and so on in there. Now, if you are on the simpler side and all you have is a W-2, maybe some bank interest, you can go ahead and file early. I always tell people that have investments to not go ahead and rush to file, because a lot of the times, if you have investments in a non-retirement account, like an individual brokerage account, very often what I see is, number one, people forget that they're getting a 1099 because those are typically issued sometime in mid-February. So you might get your W-2s right at the end of January, and a couple other things, and then you think you're ready to file. And then you go ahead and do that. And then February comes and you're like, oh, wow, I just got this 1099. Now what, right? So ideally, if you have investments, I highly recommend that you wait until you file your return, until sometime in mid-February, maybe early March. Because another thing I've seen with those 1099s with investments is that even if they issue one in February, sometimes they actually get corrected because they don't have all of the information from all the underlying withholdings that you have within your account. So for the most part, if you're going to have a little bit more complexity because of investments, maybe wait a little bit until March so that you make sure that you have the accurate documents and all of the documents that you need to file that return. However, I do have a checklist because I know there's a lot to keep track of, right, in terms of income and deductions and so on. So if you want my checklist, happy to send it to you. Send me an email, luis@onmywaytowealth.com, or hit me up via DM. If you follow me on Instagram or LinkedIn or even Twitter, right? Just send me a DM. Tell me, hey, I want the checklist. I'll just send it over to you. I'll send you a link that you could just download the checklist for yourself. Very helpful. So that at least you go through it, you see if any event applies to you, and then you go ahead and just start getting organized. So very helpful. So hit me up, luis@onmywaytowealth.com, or send me a DM. Another thing, number 3, is to file electronically. The IRS operates much faster and safer if you file your return electronically. And also, if you do a refund, request a direct deposit. This is the fastest and safest way that you're going to file your return. Right now, the IRS says that you're going to get your refund maybe 21 days or less. If it's nothing complex that they need to further review, very likely they'll just process that return. You get your money up to 21 days. I've seen people get it even sooner than that in past years. If you mail it, then, there are circumstances when people do have to mail a return, but if you could avoid mailing it, I highly recommend it because it's not as safe. Obviously, all your personal data is just out there in an envelope. And number 2, the IRS is backlogged. By the time they get to open your envelope, a human being has to process it and so on. It's just going to take a while. So try not to get to that point where you're mailing a return. Number 4 is just some common mistakes to avoid. These are some things that are very easily overlooked, and I want to make sure that I tell you about them. I see this a lot in my practice, so I want to make sure that I just spread the good word so that you don't make the same mistakes. One of them is if you have student loans and you are in an income-based repayment plan and you happen to be married or got married last year, the student loan company, right, the servicer, is going to use your combined income, you and your spouses, if you are in an income-based repayment plan and you file a joint return. So one thing I recommend is if you are in that boat, speak to your financial advisor or your accountant and see what it would be like if you filed married filing separate. A lot of the times, married filing separate is not the best option from a tax perspective. It depends. Sometimes there's no change depending on your situation. So that's on an individual basis. But I see a lot of people who maybe married filing separate is not the best option from a tax perspective, but it is a significant difference in their student loan payment because they are in an income-based repayment plan and maybe their income with their spouse combined is just way higher and the payment on the student loans is significantly higher. So you kind of have to look at it from a standpoint of which way do I save the most money? Is it better for me to do married filing separate and have a lower student loan payment, or married filing joint and have a higher student loan payment? And then you have to see the difference in the refund. But I just highly recommend to at least consider that option if you're married and you are in an income-based repayment plan on your student loans. Student loans, people started making payments not too long ago. So definitely take a look at that. Another mistake to avoid is if you owe money, don't not file your return. I spoke a little bit about this earlier. Make sure that you still file your return by April 15th because there is a failure to file penalty. So if you don't file, you're going to get hit with a penalty. So at the very minimum, if you can't file for some reason, get an extension. You could ask the IRS for a 6-month extension. However, again, if you are going to owe, you think you owe, figure out as much as you possibly can, how much you owe, and go ahead and make a payment or as much as you can by April 15th so that you don't get penalized because there's going to be not only the failure to file penalty, but then you have penalty on the money that you owed by April 15th, plus interest going forward. Now, one thing to know is that the IRS does offer payment plans. So if you owe a significant amount of money or you just don't have all the money that you owe, you actually can request a payment plan. So I highly recommend that you open up an account online. You could request a payment plan when you file your return, or you can log in later or wait until they send you some correspondence. So it's pretty easy to set up. Highly recommend that you do that. File your return on time and request a payment agreement if you cannot pay the full amount. If by next year you do a refund and you still have a balance, the IRS will likely take that refund and apply it to whatever balance you have. But you want to be in good standing. You don't want it to get to a point where they're trying to garnish your paycheck or anything like that. So do the best you can to file on time and request an agreement if you can't pay. And also, if you made a mistake, remember earlier I was talking about getting organized. Sometimes people rush to file and then they get a form later. And it's like, oh, wow, I just got this 1099 for my investments. I forgot all about it, or I sold some cryptocurrency or something, right? There's a remedy for it. You can actually file an amended tax return. It's a 1040X. So if for some reason you rushed to file, you thought you had everything, something else came up afterwards, you didn't realize it, I highly recommend, speak to your accountant, see if it makes sense to file an amended return. Sometimes you do not need to file an amended return. The IRS sends you a letter and it says, hey, because the IRS actually gets a copy of most documents that you get a copy of. So if you get a W-2, for example, the IRS gets a W-2 as well. If you had unemployment and you had a 1099, they get a copy. If you have gambling income, they get a copy. So ultimately, they're going to put it together and say, hey, you filed this return with this much income. However, we also have a copy of XYZ form that you didn't include in your return. If that's the case, you want to go ahead and ask your accountant. It might make sense to file an amended return. Sometimes, if you had taxes withheld from that income, you might get yet more money back. Or you might just owe some money because you got a bigger refund than you were supposed to. But you want to know what that number is, rectify it immediately, file that amended tax return and send it out. So don't let it just be and think the IRS is not going to catch it, because sometimes it might take them a while to catch it, right? 2 years down the line, they might catch it. But guess what? If you owe more money, they're going to hit you with some penalties and interest, right? So don't let it get to that point. And now, finally, I just wanted to share some resources. These are some great tools that you can use to either protect yourself or make things easier on yourself. Number one, the IRS. And by the way, all these resources, I'm actually putting a direct link. You could just click on it in the show notes. It'll take you right to them. Number one, the IRS offers an identity protection personal identification number, IP PIN. As you probably have heard, you see very often in the news where organizations get hacked, whether it's a health insurance company or a credit bureau or anything like that. Companies that have your personal data that gets exposed, people have your name, address, social security, date of birth, and so on. What's been happening is a lot of those people have been able to file a fraudulent tax return with people's information. And usually they do it very early and claim a refund. And what happens is by the time you go file your actual real return, the IRS says, hey, this is unacceptable. We already have a tax return on file for you. Creates a huge mess because now you have to let the IRS know that this was fraudulent. You have to file forms and a report and then file the real return by paper because it could no longer be filed electronically. It's a whole mess. I've seen people where it literally has taken them years to get their refund back, their real refund back, and until the whole mess. So one way to protect yourself is to actually apply for an IP PIN. And what the IRS does is once you're registered, they send you an individual number that then has to be used on every single return that gets filed in your name. Otherwise, the IRS actually does not accept the return. So if somehow a company gets hacked and your personal data is exposed, and then one of those hackers tries to file a return with your information, but they don't have your PIN, they won't be able to. So this is a great tool for you to do. Maybe you won't be able to get it in time for this tax season, but just look into it. There's a link in the show notes. Maybe request one, and maybe you get one for next tax season and every year going forward. And the IRS actually mails you one every single year, a complete different PIN. So this is a great tool for you to be able to protect yourself. Another thing is the IRS actually offers a free file option. This is a joint effort with some of the major companies that provide software. So that actually opened on January 12th. The returns can be filed there, but they could be prepared. So if you qualify, you can go ahead and get access to that software. This is more like a do-it-yourself option. If you make $79,000 or less as an individual or family, you can get access to this free software and just do your tax return yourself. This is probably better for people that are more on the very simple side, right? Like if you just get a W-2, your tax return isn't too complex and you feel comfortable doing it yourself, you can go ahead and do that actually and get free tax software. So there's a great tool there. It's called Free File. There's a link in the show notes as well. Another great resource is for people that are either considered low income or elderly. There's a VITA, that's a voluntary income tax assistance program, or the TCE, which is for seniors. If you make 64,000 or less, you have a disability, or you are 60 years older, or if you're a limited English speaker, you may qualify for this. And basically, you get free tax preparation assistance at one of the volunteer centers. So I'm putting a link in the show notes as well, so you can see if you qualify for the program and where to find these offices. Another big one is if you are in the military or you know someone who's in the military, there is something called Mil Tax. And this is a free service, free benefit for the military service members via Military One Source. I'm putting a link in the show notes as well. You can actually get free access to the tax preparation software and also access to speak with the actual tax consultant if you have questions. And these consultants actually specialize in military personnel. So if you're in the military, you know someone, definitely share that Mil Tax link with them. They probably already know about it, but go ahead and share it anyway. Another tool is once you file and you just want to kind of see where the status of your refund, the IRS has an online tool. It's called Where's My Refund? You can click on it. They're going to ask you a few questions, and then you can see the status of your refund. That way you know where it's at, when to expect it. It's also another great tool if you're waiting for that refund, you want to know more or less if the return was processed, when can you expect the direct deposit, and so on. So it's called Where's My Refund? There's a link in the show notes. Another thing is there is a direct link, again, for those people that owe, where you can create an online account and request a payment agreement. So I'm actually putting a link for the IRS payment agreement application. And finally, again, if you want a copy of my checklist so that you can get organized this tax season, send me an email, luis@onmywaytowealth.com, or just send me a DM on Twitter, LinkedIn, or Instagram. And I'll be happy to just send you the link so you can download the actual checklist that I use with my clients, just so that you can get organized, go through that checklist, see if anything applies to you, and then you'll be good to go. So I told you it was going to be short, sweet, straight to the point. Thank you for tuning in, and I'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.